So the other aspect of our conversation has to do with buy now, pay later, payment markets in Nigeria that is expected to grow by 13.8% on an annual basis to reach 1.62 billion US dollars in 2025, according to projections. Now, the BNPL market in the country experienced robust growth during 2021 to 2024 between that particular years, what we tracked, achieving a compound annual growth rate of about 23.1%, driven by increased e-commerce activity, financial inclusion initiatives, and change in consumer preferences. So with projections indicating steady growth over the next few years, will this enhance quality credit solutions to Nigerians, or by design, will it further run them into futuristic debts? Well, we're joined by Olufemi Olanipekun, co-founder and CEO of VeendHQ. I hope I got that right. Thank you so much, Olufemi, for coming around.
Thank you very much for having me.
All right. So is the buy now, pay later market good for the system, with Nigerians having to pay more with flexible credit solutions?
Okay, thank you. So first, I believe that credit is a basic necessity that everybody needs access to. So first of all, buy now, pay later is a tool that everybody needs. It helps financial inclusion and helps drive financial freedom. So it is a must that it exists in this part of the world.
All right, let's do a bit of comparison with other African countries. Probably, we take South Africa, Kenya, other northern countries like Egypt. Is it gaining traction in those countries too?
Yes, it's gaining traction, especially with Kenya and South Africa, right, where the fintech and telco partnership has really driven the growth in those markets. But when looking at Egypt, you see that the growth is majorly driven by e-commerce activity. So it's growing exponentially, and we hope to see the same results in Nigeria.
All right. So with the buy now, pay later market projected to hit about $1.62 billion this year, or between this year and next year, what are the factors you would say are actually driving this projected growth?
So first, the main factor is one, the partnership that needs to happen. The banks still have a role to play here, right? They are still the custodians of a lot of funds. So for buy now, pay later to be successful, the liquidity needs to flow, right, from the banks to consumers. Now, we also have technology where automation has a key role to play. So at Veend, we have a product called Vida that has ensured that credit decision is instant and also connects the fintechs to the banks, so that whenever a purchase is about to happen on any e-commerce store or an on-site store, right, the transaction is instant, right, and the liquidity flow from the banks down to the merchants that is processing that transaction.
But then are Nigerians truly embracing financial freedom to even embrace a buy now, pay later kind of market? Some people feel that it's just a way of normalizing debt under a fancy name. I don't know what you think.
So yes, Nigerians are embracing this because it helps smoothen payments, right? Like I said, BNPL, it's a tool. It's a tool that helps you manage your cash flow, right? If you earn money and you want to buy something to improve your productivity, BNPL is a tool that works perfectly for that. Think of a farmer who has a fish farm and has to rely on electricity, right? And has to buy a solar power unit, right? That farmer needs a way to smoothen that payment over a long period of time. So it's a tool that will really, really drive productivity.
Is BNPL better than credit cards?
They are two different products, but BNPL, first of all, is focused on payments. It meets you at that point where you want to make payments. And it also helps you see the cost that is attached to that purchase instantly. If you are going to pay an interest rate or a fee, you see it instantly. Whereas for credit cards, as seen in other parts of the world, there might be some hidden charges, right? And in the case of accessibility, BNPL is much more accessible in this part of the world. In this part of the world, credit cards are not that popular, right? Not that accessible. So there are two different products, but for this market, BNPL has a bigger role to play.
Okay, so before now, we know that traditional banks used to control how Nigerians access credit, but then with BNPL on the rise, are these traditional banks losing their grip, or is it some sort of a healthy competition within the ecosystem?
There is no competition anywhere. The bank still has a role to play here. The banks, fintech still needs to partner with banks to drive BNPL, right? Majority of the customer base still exists within the bank ecosystem. The liquidity exists within the bank ecosystem, right? But fintechs are really, really good with the technology to automate, to smoothen that process, to make that payment instant, right? And that is a very, very huge role to play. So the bank very, very much still has a role to play here.
All right. So now, the expansion of BNPL into sectors like transportation and other areas like utilities seems to suggest a shift beyond, traditional online retail kind of banking that we've always known. So does this indicate some sort of a long-term transformation in how transactions are done for Nigeria? Is this something that will cut across different spectrums of, transactions for Nigeria's markets?
Yes, it's a big change, right? But it's surely happening, right? First of all, it makes payments super seamless. Whether your card is working or not, it no longer matters. Whether you have money in your bank account or not, it no longer matters, right? What matters is, do you have money, a cash flow, right? Do you have income coming in the future? And that helps you live a better life. So yes, this still has a role. It's a shift, right? And it will definitely make life better. Like I said, credit is a basic necessity. It's not luxury. It's something that everybody needs, both rich and poor. It's a tool, right? So that's the way I see it.
You keep talking about, how good buy now, pay later is. I'm wondering if it has any flaws.
So it's a tool. With every tool, there's a good part, there's the bad part, right? But it depends on the person using it. Lenders have a role to play by lending responsibly. That means embracing data-driven tools, right? Being extremely data-driven in making credit decisions so that they don't give more than what a borrower or a user can afford. The borrower also needs to be a responsible borrower so that they don't take more than what they can afford to pay, right? They don't go to platform A, get buy now, pay later, then go to platform B, C, D, right? Just at the same time, knowing fully well that they might not be able to pay back. And that is where technology comes in, right? Aggregating all that data, partnering with the credit bureau, partnering with other data points, partnering with the financial institutions, just to make sure that the data that is required to make the best credit decision is brought into the equation to make that transaction successful, right? Now, the second one will be on the payment leg, automating the payment leg. So we have a lot of payment companies now. They also have a role to play, right? The regulators also have a role to play here. So I think I'm still very, very excited about BNPL.
All right. Now, by 2030, Nigeria's BNPL market is expected to double. But then, can this growth be sustained if consumer purchasing power isn't rising at the same time or at the same rate with the economy facing inflation? And of course, we're still having issues with currency instability.
So the goal is not to grow consumption with buy now, pay later. The goal is to smoothen payments, right? So whatever a consumer is earning, right, whatever they are eligible to take, the goal is to ensure that they can pay for it successfully and instantly while extending the period of time, right, of which they can pay for that particular product or services, not necessarily to grow consumption. So that way we don't push people into debt, and that's where lending responsibly comes into play.
All right, so of course, BNPL is often linked to e-commerce, but if Nigerians rely on it for daily spending, does this point to relative convenience? I mean, we're looking at an ecosystem whereby internet penetration is not still that optimal, and you're saying that this is technology driven. So how convenient can it be for them when they're struggling with buying data, internet penetration, struggling with affordable essentials and all those bottlenecks?
Yeah, so I'm looking at the future where you can pay for fuel using buy now, pay later. We know how expensive fuel is right now. You can pay your PHCN bill, your electricity bill with buy now, pay later, right? So it has to be a part of the day-to-day life of everybody, right? So that's where it should be. Credit, anything credit is a basic necessity. So whether you need it now or you need it to pay school fees or you need it for just managing your cash flow, right? It's a basic necessity. So I see a future where people use this for their day-to-day activity, right? Without thinking about it, right? I'm going to pay for this now, and then at the end of the month, yeah, you take it from my paycheck, right? Or at the end of the day, you debit my bank account, right? It just makes purchase easier.
Okay, so earlier on you talked about responsible borrower. So now, as more retailers and fintech firms integrate BNPL into their services, consumer adoption will definitely grow, so to speak. Now, how well can they ensure that interest rates are affordable and accessible by all?
Okay, so first, the regulator have a role to play here, right? Then also, I'll say the capital markets and then the banks, right? So first, secondly, what we also need to know is interest rates is majorly determined by the cost of capital, right? Cheaper access to funds means lower interest rates, right? So we call on the regulators, the banks, right? Once cost of capital start going down, then the players in industries are able to control interest rates. But then there's still a role now where the regulators needs to come in, right? How do we set a standard, right, for the interest rates for buy now, pay later, right? But still, if there's a world where buy now, pay later can also be merchant driven, where it can be interest free, right? A merchant is looking for a way to sell products now. Whether you pay at the end of the month or in 90 days time does not matter. So far that product leaves the store. So there's a world where a merchant is able to give out products interest free, right? And that's the beauty of BNPL, right? While the liquidity can come from the bank, right, there's a model where the bank can instead earn a commission instead of an interest. And then the merchant, just because they want to sell that product, can pay a commission that they would have paid to their sales agent or their sales team to the bank while maintaining the same price point to the consumer, right? So there's a world where BNPL is going to be interest-free. But when it's interest, when it has interest, then cost of capital comes to play, right? And that's where regulators and then the banks comes to play, right? Because they determine that.
So what about cases whereby customers default on repayments, or probably there's an unforeseen, unprecedented incident of probably death and all that? How do you think that these fintechs and all these companies will be able to stay in operation and probably navigate such situation?
So in this case, insurance is very important, right? Things like credit life insurance ensures that when a borrower is unable to earn money, they lose their job, or for example, if they leave this world, right, the lender gets compensated, right? So insurance is key in this aspect. But in cases where the borrower is unable to pay, either due to unforeseen expenses, right, that is where the payment systems that we have to kick in, right? And also that is where maybe working with the banks to restructure the facility then comes into play, right? So, but most especially, these transactions have to be insured.
All right, thank you so much, Olufemi Olanipekun, co-founder and CEO of VeendHQ. Well, we hope that Nigerians, even as they tap into this, will be able to stay within the confines of their financial portfolio. I mean, it only makes sense if they're able to borrow what they know that they can pay back with the interest rather than get themselves into financial problems, even as we see these kind of credit solutions coming to them. It was nice talking to you, Olufemi. Thank you so much.
Thank you very much.